What's going on, everybody? Today we're going to do something a little bit different. We're going to be reacting to some TikToks. I've seen other channels do this. I always enjoy these types of videos. I think they're pretty funny, and I got TikTok just for this occasion. I'll probably delete it afterwards, but I think it's going to be fun. So let's dive right in.
If I were investing my very first dollars in 2024, here's where I'd start. First, I'd check if my company offers a 401k account. This is an amazing place to start because your company might match your contributions to that account, making it essentially free money and giving you so much more bang for your buck. If they don't offer a 401k, look into opening a Roth or a traditional IRA. This can have some tax benefits, which can also save you money in the long run. If neither of those is an option, try to look into a traditional brokerage account. There are so many sites out there and they are so easy to open, from Fidelity, Schwab, Vanguard. Just make sure you pick one that doesn't cost you any fees. Once you do that, put in some money and pick your investments. Experts typically recommend diversified bond and stock funds like index funds. And the last step, this is important, make sure you automate your investments. That way, money will be going from your paycheck into your investment account monthly without you even knowing it.
Honestly, that one was better than I expected. All the TikToks I've seen are very negative and people are just giving bad advice or roasting each other. I think this is a really good path to take. This is something that I do as well. Getting your 401k match is free money. I think that's really great to do. After that, you can get a Roth IRA or a traditional, depends on basically your income. Generally, I think it's good to get a Roth IRA if you're making less money now than you think you're going to make in the future. But if you're making a ton of money right now and you think you'll make less in the future for whatever reason, maybe traditional's the way to go. And you can always do both if you want. As far as investments to actually buy, index funds are generally going to be the simplest for most people, unless you want to spend your time trying to pick stocks, which is a difficult thing to do and basically impossible. Index funds are a much easier choice. And then, yeah, automating is great. Not bad.
How can we just be living off of fast food every second of our life? We're okay with this?
No, but I'm pregnant, so like at the end of the day, I don't want to cook every day. I don't trust him to cook.
Meal prep? What do you mean you don't trust him to cook?
That's the problem. That's the biggest issue. Like I can't.
What is gonna put like cayenne pepper in it?
No,
what are you talking about?
She's got a weird thing with meat. She doesn't like. It's weird, and she'll.
What's a weird thing with meat?
She's the type of person we could go to like out to eat or something, and she will buy a $20 meal, take one bite of it, and get like a piece of fucking fat or like a gristle or something, and waste the whole fucking meal.
What the fuck are we talking about, guys? We can't cook because you're afraid of gristle?
Yeah,
I can cook, but I just don't feel like it.
Meal prep.
Every day.
Microwave.
And
Meal prep. Microwave. Meal prep microwave. You don't trust him? What do you mean? What can he do? What would he fail at? Making spaghetti. The fuck would he fail at?
Exactly. That's what I'm saying. It's
like if it's undercooked.
Cut through and check.
But you can't tell. Like,
yes, you can.
Like
pork's a little hard, but beef and chicken's easy.
He made beef stroganoff the other day.
Yeah, beef's super easy to tell if it's raw.
Yeah.
Exactly.
I don't know. It's just my brain. I just think.
What?
I just think that I can't trust it if I didn't cook it.
Is that a medical disorder?
All right, I don't want to go too long with that one. It's a little over 2 minutes. That's an interesting excuse for going out to eat. Is that I don't trust my partner, especially if she's pregnant. I would hope you trust the person that you're having a baby with. Someone said she trusts teenagers working at fast food restaurants, but not her husband. I think that pretty much sums it up. Yeah. Eating out's going to be way more expensive than meal prepping and buying groceries, generally speaking. I remember when I was not married and I was just single, groceries were maybe like $50 a week total. Because I would get a ton of rice, like a huge bag of rice from Costco, for example. It was like a 50-pound bag for $20. Peanut butter and jellies are cheap and high calorie, which is what I needed at the time. And then you can get chicken thighs at Costco too. Eggs were cheaper then as well. So like, anyway, my point is there's a bunch of ways to buy in bulk at the grocery store and save a lot of money if you're able to cook a little bit and meal prep. I don't think you should resort to eating out and then give a poor excuse like, I don't trust my husband to cook. So there's that.
I'm tired of people giving advice and saying, these are the stocks you should buy. And here's what the economy is going to do next quarter. I was like, no one was any good at it. But I was always just fascinated in what's going on in people's heads. And you asked, why is that important right now? Well, I think it's always important. Like those topics of, the subtitle is timeless lessons, because I think a lot of these things were as true 1,000 years ago as they will be 1,000 years from now. Like greed and envy and impatience is just ingrained in how people think. It always has been. And so you see what's going on right now with tariffs, the economy, stock market's gone up a lot, Bitcoin's gone up a lot. So these points have always been true, but a lot of them are magnified right now. A lot of people have made a lot of money on Bitcoin. A lot of people are losing a lot of money on tariffs. So greed, fear, envy, it all kind of just collides. It is right now.
So I think overall that's a good point. I don't know the question that he was answering with that, but if you don't know that, I believe that's Morgan Housel, who wrote The Psychology of Money, really popular finance book right now. And yeah, generally speaking, all of the stock advice and what the economy is going to do, nobody knows, really. I mean, if the greatest investor ever, Warren Buffett, says nobody knows what the stock market's going to do today, tomorrow, next week, and basically every economist projecting the economy is wrong all the time, I think it's better to focus on your own psychology, which is a really good point that he makes. He knows that fear, greed, and envy are things that humans go through. So from like a financial perspective, in terms of what do you actually do with this information, for me, it's, don't try to predict the future, and just keep doing the things that have generally worked over time, which is buy index funds, dollar cost average, save your money, spend less than you make, right? Pretty basic stuff, but it works.
5 things to never do with your money. My name's Steve. I'm a former public school teacher, and these are the money lessons I wish I taught my students. 1, I would never lend money to my family or friends. Borrowing money gets awkward, and there's a lot of unnecessary drama when someone doesn't pay the other person back. If I were to help someone, I would just give them the money and wish them well. 2, I would never use a debit card. When people use their debit cards, money is automatically taken away from their checking accounts, and if there's fraud, it's very hard to get your money back. Instead, I only use credit cards because of the fraud protection and free stuff that I get, and I make sure that I pay it off every single month. 3, I never save all my money in banks like Chase, Wells Fargo, or Bank of America. Instead, I use a high-yield savings and CD because I get paid way more money because of the higher interest. 4, I never put off investing. I prioritize it. Every wealthy person in the world knows that in order to become rich, you have to own assets. And by investing in a Roth IRA, it's one of the easiest ways to do it. 5, and this is the most important, I would never become a slave to material things. The world will trick you into thinking that in order to be happy, you need to have a luxury car, expensive jewelry, and designer brand clothes. You don't. I guarantee you can find joy in other places in life. Prioritize your purpose, peace, and pocket. I hope this video helps.
Purpose, peace, and pocket. I like that. I generally agree with almost everything that Steve says. If you've seen his videos, I think they're really good. I think they're simple and actionable, which is why people like them. Don't lend to friends or family. That's great advice. Just give them the money. No need to make it complicated. I didn't agree with never using a debit card, mainly because I don't know anybody who's said, hey, I've made all of my money and I've gotten really rich from my credit card points. That's not to say that they're not useful and that loads of people don't use them correctly, because I think tons of people do. I just personally don't. Most banks have fraud protection that works just fine. We've experienced it ourselves. We've had some Chinese companies like take a bunch of money out of our checking account and then our bank just put it right back in a few days later. It wasn't a big deal. To say that you never use a debit card and you want to use credit card for fraud protection, I get it, but I don't think it's a huge deal. And I'm not a huge fan of points either. Maybe that's because I don't travel. So I just generally don't agree with that, but that's totally okay. I think Steve's doing just fine. And all the other advice that he gives about investing, using a Roth IRA, I think that's really good stuff. So he does great work. Good job, Steve.
Here are the 4 resources that I use to learn virtually everything that I know about personal finance. These are all either books or podcasts, so low to no cost, very low barrier to entry here. I've obviously read a lot of other personal finance books and also listened to a lot of other money podcasts, but these are the 4 that made the biggest impact in my financial literacy journey. First is one of the very first personal finance books that I ever read. This book is Rich Dad, Poor Dad. This book gets a lot of hate because the author is kind of controversial, but regardless, this book truly was so transformative and so life-changing for me because it truly was the the first time in my life that I was really introduced to the idea of building wealth. Of instead of using your active income to fund your lifestyle, you use your active income to buy assets that then fund your lifestyle, and getting out of the rat race that is working every single day up until the day that you die. A very good money mindset book here, and I think that's really important as a place to start to really understand like why you should care about your money. After that, I read the book I Will Teach You to Be Rich. And this book is an absolute great beginner book. I'm so happy that I read this when I was like 19 years old in college. It teaches you literally everything that you need for a really strong financial foundation. Everything between the accounts that you need, how to spend money, how to save money, how to invest money. Just a really good overview of kind of everything that you should consider when it comes to your finances, and it's a super easy read. Then third, this book taught me how to invest in the stock market in literally the simplest way possible. The author wrote this book for his teenage daughter, so you can definitely tell it's like very simple language, very easy to understand. But this book gives a really good overview of why you should be investing in the stock market, why it's not as risky as you might think, and exactly step by step how to do it in, again, the simplest way possible. And then fourth is a podcast. It's the Bigger Pockets Money podcast, and I can't even tell you how many hundreds of hours I spent listening to the Bigger Pockets Money podcast in college and the first year out of college. This podcast is amazing for so many reasons. When I was super early on in my financial literacy journey, they're kind of like beginning episodes that would go through the fundamentals were super good for me. But then even after that, once I felt like I knew the concepts, all of their other episodes are a lot of like interviewing people with different backgrounds, people that retired early, started businesses, just people that are doing really incredible things with their money. And that was super inspiring to me. So in a nutshell, when it comes to personal finance, there honestly isn't that much to learn. But once you actually learn the concepts, it's a whole other thing to remain financially disciplined to actually hit your financial goals.
That was a good one. Rich Dad, Poor Dad. I think everybody starts out with that. That's been a really popular one for a long time. It might even be the most popular personal finance book of all time. I don't love Kiyosaki. I think he's kind of obnoxious these days. There's basically only one page that I think is useful. And it's the page where he's kind of illustrating how poor people, middle class, and rich people handle their money. Other than that, it sounds like a bunch of fake stories that Kiyosaki's making up. And it just seemed weird to me when I was reading through the whole thing. So if nothing else, understand that if you buy assets, they can make you money over the long term versus having to work forever. And that's literally the whole book. You don't even need to buy it anymore. The other ones I haven't read, but Ramit has a really good YouTube channel and a Netflix series. I think he gives totally sound advice. The Simple Path to Wealth, Mr. Money Mustache forwarded it. And that's really all I need to know, because I think he was like the pioneer for the FIRE movement probably a decade ago or so. I think there's just generally good principles of spend less than you make and invest as much money as possible. And then you can build wealth quickly. Like the Bigger Pockets podcast. I've listened to that for some time when I was more interested in real estate. That's kind of their shtick. So if you're interested in real estate, I think it's a really good podcast to listen to. And yeah, she's right. They have a ton of really cool guests on that, and it's really interesting. Yeah, these are all good. Like, these are a lot better than I was expecting. I was hoping there would be some embarrassing ones. All right, we have one more. My net worth at 28 years old.
Here is my net worth update as a 28-year-old. I turned 28 today, so a fresh 28-year-old. Diving right in. Checking account, $6,352. Savings account, $1,098. I just kind of leave that there. Don't really do anything with it. Cold hard cash, $315. Emergency fund, I moved some more money into this because it's in a high yield savings account to set aside for taxes coming up. $24,747. Moving on to investments. My 401k from my old job. It's just been sitting there. I need to roll it over. 401k, $38,348. I have a health savings account, $13,957 that is invested. Roth IRA, this one gets people. $158,687. I've rolled over past 401ks into that account. That's been open now for 7 years. The rollovers don't count against the yearly contribution limits. That's why it's so high. I also have a traditional IRA from rolling over a different 401k, $18,929. And then just a regular taxable brokerage account, $55,268. I don't have any student loans. I don't have a car loan. My only credit card debt right now is $26. I pay those off every month. This makes my net worth $317,674. This time last year, my net worth was $230,000. In that year, I have invested $27,000, and my net worth has gone up so much. So this is your sign to invest.
That's fantastic. 317K for a 28-year-old is way more than most 28-year-olds have, most people have. That Roth IRA is massive, which is awesome. So that's cool that she was able to roll over 401ks. I think she said she had her IRA for 7 years. I think that just speaks to starting earlier is so much better. It's a massive advantage because having 300K at 28, by the time she's 40 in her mid 40s, she's going to have well over $1 million. And she's not even going to have to do a whole lot with it, right? Because most of it's invested. And if it's invested in index funds, I don't know if she mentioned that, it's really just set it and forget it, generally speaking. Yeah, really good job. So there you go. I think we'll stop there. I think it was 5 or 6 TikToks. Let me know in the comments if you enjoyed that, because I'd be willing to do more. In fact, I might just do more anyways, just because they're fun to watch. And surprisingly, there was a lot more good advice than I expected, which is really cool. I enjoyed that last video because I also did a My Net Worth at 28 video, which you can check out here next. And then I will see you there. Peace.